Hello, everybody, and welcome to this BIA budget webinar. The budget, what does it mean for life sciences? I'm Steve Bates, and I'm joined by my colleague, Martin Turner. And I hope in the next few minutes we can take you through sort of what's gone on in the budget from a life sciences perspective, some context about how that fits into the government's agenda, and be able to answer your questions. So if you do have questions, do please put them in the Q&A. And me and Martin will do our best to answer them. Don't make them too complicated about your individual company tax position, because we can't do that. But overall, we hope to be able to do so. Martin and the team have done a fantastic job of producing both slides, and I hope you've got, as members, written materials analysing the budget in the last week. So I hope we're starting from a degree of knowledge of this, and you're in the right webinar. So Martin, as you're putting the slides up, I think the next slide shows pictures of me and you wearing different shirts, and our official titles. You can see I used to have more hair. So let's crack on. Obviously the context for this is a new government. Here's Prime Minister Keir Starmer and Rachel Reeves, the Chancellor, happy in the summer to have won the election in the UK. So there's new governments around the world as we get to November, but it's good to see that this is really sort of the opening statements of a new Labour government having won a secure majority in the general election in the UK in July, and they've sort of set out as their goals the big missions, and here they are in beautiful colours, 5 great missions. And of course, from a life science perspective, we obviously nest very happily within the first one, securing the highest sustained growth in the G7. We've positioned ourselves as a growth sector. I think that's right. We obviously have an important role to play in helping build an NHS fit for the future, and we've worked very closely there. You can see in the wording, it says harnessing life sciences and technology to reduce preventable illness and cutting health inequalities. And for those of us who work in deep biotech, there's elements of what biotechnology can do to help make Britain a clean energy superpower. So we've tried to make sure that we fitted the agenda of the BIA and agenda of the companies in our membership alongside these missions, and I think we've done a reasonably good job of doing that. In a sense, the budget looks at the first of this: how do you deliver growth whilst making sure that the economy is secure? And that's really what the Chancellor was trying to do. Next slide, Martin. We didn't wait to the budget to get engaging with the new government. Here's a picture of me and the Chancellor the day after she was appointed, meeting in the Treasury with Patrick Vallance, Peter Kyle, Patrick Vallance, the Science Secretary, Peter Kyle, Patrick Vallance is Science Minister, Peter Kyle in the grey suit in the middle picture is the Science Secretary. And we've also had meetings at the Life Science Council. The picture here on the right is the first Life Science Council met a couple of weeks ago with Wes Streeting, the Health Secretary, and Gilly Merron, the Lords Minister in the Department of Health, who looks at life sciences, amongst others there. So we've had a good opportunity to not only put policy positions through, but also get to know and make some engagement with the new government. And that continued through the party conference season. You can see the BIA banner is strong and prominent in the left-hand side here. Martin, you were hosting George Freeman, I see there, at the Conservative conference. Chiel Mwira, the new head of the Select Committee for Science and Technology, speaking about deep biotech in the bottom left. Emma Reynolds, the Treasury and Pensions Minister, talking about the pensions agenda and UK biotech financing. And the august group on the right are the new all-party parliamentary group on life sciences, formed and engaged and actually writing to the Chancellor ahead of the budget. So lots of work has gone on. We've been doing lots of stuff, as well as taking some good, bad and indifferent photos as we've gone through, and that's all my fault for having a bad camera phone. Next slide. So if you think about it, the way that I think the Chancellor sees it is there's an autumn of 3 acts, a tripartite event. Three acts are coming, a bit like the Star Wars trilogy. Now I've got to remember which one's first: Star Wars, Return of the Jedi, then Empire Strikes Back, or is it Empire Strikes Back and Return of the Jedi? Can't remember. Anyway, there's 3 things going on this autumn. The first one is the International Investment Summit. That's clearly Star Wars. The budget is number 2, and then I think number 3 will be the Mansion House. And we're going to try and talk about each of these in turn, because I think you need to think of them as coming together for the whole. So Martin, why don't you sort of mention which bits came out in the first act at the International Investment Summit a couple of weeks ago?
Yeah, so the International Investment Summit was, as you say, the first opening act after a summer as the government settled in, and obviously the party conference season kind of disrupted the kind of flow of what could have been a range of political announcements. And there was much criticism of the government for not getting out straight away and announcing a raft of tax changes and growth measures. But I think what they were trying to do was think through quite carefully and make sure that they had spoken to industry both before the general election, but also once they're in power, and basically lined things up. And the investment summit, which I think was on the 14th of October, was eagerly anticipated, and came with a raft of both policy announcements and also investment announcements totaling over 60 billion, I believe it was. We want to pick out two here that were important for our members and our sector. The first was the British Growth Partnership that was announced. This is to be run by the British Business Bank and is intended to direct pensions money into innovative businesses, and life science has been key there. So this was part of the Mansion House Compact and the pensions agenda, and had been in development by the British Business Bank for some time, and they used the investment summit to announce it as a new phrase, a British Growth Partnership, for us to all work with. And this was announced also alongside the National Wealth Fund, although we did have that announced over the summer in headline figures, but there was more meat put onto the bone of that announcement, in that would be focusing on infrastructure primarily, although not solely. They did say that it would also potentially invest into companies, but British Growth Partnership would be very much focused on growth equity, supporting scaling companies. So that was one very welcome announcement for our sector. The second was that they will maintain R&D tax credits, which provide, as the Chancellor said, generous support for innovation. They said that they maintain these over the period of the Parliament. Now, we were waiting for the budget. This is when we expected that announcement to land. So we're really pleased and relieved to see the Chancellor using the Investment Summit to say that she would maintain R&D tax credits. Now, I want to... Sorry, Steve, go on.
Well, Martin, I think, we were doing it properly, weren't we? Which is we were expecting the Chancellor to announce tax policy in the budget, but there seems to be a new interpretation of when tax policy is announced, and it was good to see it in the International Investment Summit. It is a really big thing for us, and of course, alongside this, people may remember that I've highlighted some of the deals that were announced with Lilly, the innovative new trial in Manchester. The arrival of Gateway Labs coming to the UK. So there were some life sciences announcements alongside the policy announcements here, if you remember those from a couple of weeks ago. Sorry, Martin, back to R&D tax credits.
It feels like a long time ago already, doesn't it? But yes, good to be reminded of those welcome announcements of Lilly investing into the UK, and up in Manchester particularly. So yeah, R&D tax credits obviously is a key issue for us and our members, something we've campaigned on for many years, and we have strong relationships with Treasury officials and ministers and shadow ministers as well. And although maintaining R&D tax credits sounds like a bit of a boring policy outcome, it's not increasing R&D tax credits. I think we wanted to put it in the context of the cuts that we have seen over the past few years, going back to the autumn statement in 2022, when Jeremy Hunt said that he was going to cut R&D tax credits down from 33p in the pound down to 18p in the pound for a loss-making biotech company, which would have truly been disastrous for our sector, and was based around fears of fraud in the system, and the belief that the SME R&D tax credit scheme didn't deliver value for money, for taxpayers' money. So this is something, with the help of our members, we fought very hard against, securing the R&D intensive SME rate at the spring budget in March 2023, where companies now get 27p in the pound for every pound that they invest in R&D. Now, Labour were very helpful to us during that campaign when we were trying to secure that. So we were having conversations with them pre-election about the importance of R&D tax credits, making sure that Rachel's team understood that, and that resulted in getting the commitment for maintaining R&D tax credits into the prescription for growth document that Labour published for our sector ahead of the election. And then after the election, we've been working with Treasury officials and with economists to make the case for targeting R&D reliefs towards growth enhancing sectors of the economy, which we believe is really important to make sure that taxpayers get ultimate bang for their buck, and that fraud is also stamped out. So back in September, we published this document with the London economics team, detailing how the reliefs could be targeted. And then leading up to the budget, just before the investment summit, we worked with members to write to the Chancellor, having 150 CEOs writing to the Chancellor, calling on her to stick to that manifesto commitment of maintaining R&D tax credits, which we're very pleased to see. Alongside the investment
Martin,
summit,
maybe I can just before we move on. I mean, in long and short, basically, what I take away from this is the reason why we had a result here is not because I got to have my photo taken with the Chancellor or mate her. I don't think it's even that we sent in a fabulous letter and had 150 of you sign it. It is that Martin and the team have been working on this day and night for many years, and it really is that slow engagement, the detailed policy, the ability to provide the Treasury with an analysis of what the impacts are that has built the case for this. And we have built a case that this aligns with delivering economic growth for the nation. But it's been done over a number of years. And thanks to everybody who's participated all the way along, because I think broadly, if we hadn't have done the work last year and hadn't got it into the early documents in February, we may well have been in a different place. But it's thank you to all of you, and particularly thank you, Martin, and the team for the hard work you've done on this.
yeah, and of course the BIA's Finance and Tax Advisory Committee have been instrumental in leading that work, and thank you to Colin, Mel, and Richard and Penny and many others who support that work. Alongside the investment summit was also published the Industrial Strategy Green Paper. So this is the government's proposals for how they will support key sectors of the economy, and they've identified 8 key sectors, of which we're really pleased to see life sciences as one. This is a green paper, meaning it's open for consultation. It's a high-level proposal for how they would go about designing and operating an industrial strategy. It's asking about barriers to growth of these sectors. It's asking about the nuances of these sectors, and the subsectors within them as well, and then what could be done to support them. And we're really pleased because this really aligns with what we've been saying to government and Labour in opposition as well over the past few years, that the life sciences sector is not only a key opportunity for the UK economy, but a sector that does have some nuances, some particular characteristics that mean that you do need to design specific policies to support it if you want to see it grow. So BIA will be responding to that consultation, and we will also be working on the life sciences sector plan, which, as one of those 8 priority sectors, the life sciences sector will get one of these sector plans. So we'll be working with the Office for Life Sciences between now and, well, it's going to be quite a rush dash to Christmas, which is when most of the policy work needs to be done. But then we're expecting to see the sector plan published in late spring 2025, along with the probably a spring statement where the Chancellor will set out the results of the multi-year spending review that is also happening at the moment, where she will set the departmental budgets for the rest of the Parliament from 2026 until about 2030. And obviously that spending will be important for delivering many of the proposals that we're hoping to get into the sector plan between now and Christmas. Now, many of you will know we've had quite a few life sciences sector plans or strategies or visions, as they've also been called, and we thought it would be interesting to look back to see how those have changed, particularly around the BIA's key interest of access to finance for growing sectors of the economy in life sciences. And if you go back to 2012, when the fairly new Conservative and Lib Dem government published the strategy for UK life sciences, there was very little mention of access to finance. There was certainly in there, but no real specific policies to support access to finance for life science companies. Back then, what they called the valley of death between academia and industry was the big challenge, and BIA secured the biomedical catalyst of grant funding, which has continued to this day and is the result of has resulted in some fantastic companies that have got those grants and then gone on to raise capital. There was the Enterprise Capital Fund scheme, but this was by no means just for life sciences, but was the precursor to what became British Patient Capital. Then moving forward to 2017, you've got some work on R&D tax credits and venture capital incentives, all very important, but still no real emphasis on supporting startups and scale-ups, particularly scale-ups to access capital. But then I feel that we've got a real breakthrough in the life sciences vision in 2021, where we got the task force set up, which brought together the industry, brought together venture capital investors and pension funds, and started really to understand what the barriers were and how we could unlock serious amounts of capital for growing companies in the UK. And that was also announced alongside 200 million for the first time, a specific life sciences investment program to be run by the British Patient Capital to provide serious amounts of money into growing life science companies. So those are the sector strategies that we've seen so far. And of course, as Steve said, we had the prescription for growth document published before the election, which again had some specific policies generated from the BIA and that life sciences scale-up task force that we saw in 2021, particularly the TIBI scheme, which the Chancellor has talked about. It's a French scheme that did unlock pension funds for companies in France. And we think there are some lessons learned there that we can take into the UK as well.
Yeah, so Martin, I think you're right. I look at that slide about all the life science strategies, and I think I could probably put the pictures of my children in their various school years against those, and makes me realise quite how long we've been doing this. But I think what you're showing here is that actually there's always an opportunity, and we're always available as the BIA to provide, I hope, positive input and thoughts into this. And this has resulted in some practical things that have made a real difference down the years to members. You can see that there's a good platform with the prescription for growth, and unfortunately a busy winter ahead, engaging in the next one. So although sometimes they've not always delivered everything, I think that we can see that taking the long view, they have really made a difference. And I'd much rather have a strategy to engage with than not have a strategy to engage with. And it was nice that Peter and Wes came to see Sally Ann at the Stevenage Bioscience Catalyst to launch this particular document with us. So Act 2, the actual budget itself. Why don't you take us through what were the key bits there?
So there was a lot of pitch rolling ahead of the budget. The government, when they came into power, Rachel Reeves commissioned the Treasury to look at previous spending commitments from the former government and the public finances. And she said that they identified a black hole in the public finances. There are various arguments over how big that black hole is. But really, it was the government saying, look, we're in tough financial circumstances here. This is going to be a tough budget. And to be honest, I think they had everyone worrying about what would be in this budget and what difficult decisions the Chancellor and the Prime Minister were going to need to make.
Yeah, I think it's the first budget of a parliament is often the one where the Chancellor will endeavour to raise taxes, set a new course, and we've seen some of that not only in the briefing ahead of the challenge and the political row about that, but I think also resetting the Treasury's context as to how they operate with some new rules.
Yeah, and I think every Chancellor, or at least definitely every government, tries to bring in new fiscal rules that basically are intended to give the money markets and the country more broadly confidence that they are looking after the public finances responsibly. So Rachel Reeves here, which again, she very much led with during the election campaign as well, saying that stability would be a founding principle of her role in the Treasury. So she introduced two rules, sorry, at the budget. The first is this stability rule, basically saying that day-to-day spending would be balanced with revenues, and that they would only be borrowing for investments, capital spending. And then crucially for us, she brought in the second rule, the investment rule, which was to reduce net financial debt as a proportion of GDP. Now, net financial debt is a technical concept that I can't profess to have got my head fully around, but basically it's a way of counting the public finances that ONS has apparently been using for quite some time, but hasn't been translated into Treasury fiscal forecasts and accounting practices until now. And it essentially allows the government to not only look at the liabilities, the things that it has to pay for as a result of its investments, but also potentially the returns and the value of those capital investments. So this is important if they're investing into wind farms that have a value, or indeed into debt that is given to companies, or indeed equity through the British Business Bank and the National Wealth Fund. So this is why this is really quite important. It basically gives the government more headroom because it is counting the value of those investments as well as the cost of those investments, and allows the government to invest more into capital spending as a result of that. Because
And I think this is crucial, Martin, isn't it? Because we've made the case that actually you need to invest in growth to be able to do this, and it's the change to the fiscal rules which enables the National Wealth Fund to be borrowed against, which will then be part of which will then hopefully make its way into our sector as well as into other growth areas of the economy. So this is really, really important, and is the new piece of economics, if you like, a new piece of fiscal policy from the Chancellor in this budget. Bit esoteric for us, but it underpins the important stuff that's coming our way.
It does, yes, and it answers it. It's the reason why some of the investments that were made at the budget were able to be made as well, because both R&D spending and the British Business Bank counts as capital expenditure, which is therefore permitted to be done more freely under these rules. So looking at the budget, the good first, we had got the R&D tax credits being maintained already, as we said in the investment summit. So we were feeling quite confident going into the budget, but also not sure what other positive surprises there might be. So we're very pleased to see the 520 million Life Sciences Innovative Manufacturing Fund announced. This is something that has been worked up over many years by the Medicines Manufacturing Industry Partnership, which is a partnership between BIA and ABPI. And these are capital grants that are used to encourage life science companies to invest in manufacturing facilities in the UK. The previous government announced them. They were waiting for the new government to be implemented and rolled out, and we're delighted to see the new government commit to this £520 million programme with £70 million available in the first year. And actually, moments after the Chancellor sat down from doing her speech, the website was open for companies to apply for that money. There was some extended funding, about £1 billion in total for the British Business Bank programmes. Some of that money will go to Future Fund Breakthrough, which is the bank's direct investment into life science companies and deep tech companies, and also into its life sciences investment programme, which is investing into venture capital firms that invest into life sciences. The record levels of R&D funding, so this is academic funding and innovation funding through Innovate UK, has been protected, with core research for R&D in universities and through the national academies like the Royal Society ring-fenced at 6.1 billion. I've already mentioned the R&D tax credits being maintained, but they also recognise that many of our members have been struggling with HMRC and the administration of the reliefs, and this is something, again, that we've been complaining to HMRC and Treasury about and submitting case studies of the problems being faced by our members. So we're really pleased to see that recognised, and the Treasury say that it was going to enhance the administration of the reliefs and also set up the HMRC industry expert panel, which we hope to have a representative on to make sure that HMRC is getting the best expert advice from industry on how R&D tax credits are being administered. And then finally, on this slide, the DHSC, the Department of Health and Social Care budget, was increased by 22.6 billion, which I think allowed a real terms increase of, I think, 8% in the NHS budget as well, which is very welcome.
Yeah, no, Martin, I think, oh, keep going. Yeah, keep going. I'll comment at the end of this one.
Okay. Corporation tax and the patent box were maintained. Again, these are announcements that we were expecting because they were trailed in the manifesto. Capital allowances and full expensing. These are positive for profit-making companies looking to make capital investments into the UK. And also there was, I think, about 10 billion into the Cambridge cluster and further funding for the East-West rail link, linking Cambridge and Oxford. So very important cluster development announcements there. Steve.
Yeah, Martin, I think as always, the challenge sometimes with budgets is that some of this stuff is announcements of things that are going to come. And obviously, we've lobbied for these, but I think it is important to understand in the context that this is actually pretty good news for this Parliament to have many of these programs, which will continue to operate, continue to be there, could easily have been cut. And actually, there's quite a lot of wins here, and we've made the case repeatedly for these. So although it may not feel like it's in your pocket today, lots of these give us lots of opportunity to engage and lots of opportunity for people to get funding schemes at all stages of company development.
But it wasn't all good news. Certainly, capital gains tax was increased. This was trailed. Everyone was expecting it. Depends on your perspective whether it was not as increased as much as you were thinking it might be. But certainly, capital gains tax has gone up, but not equilibrated with income tax, which is what some said could happen. Business asset disposal relief, the new name or the relatively new name for entrepreneurs relief, was maintained. Again, this is something that a lot of people thought would be completely cut. So good to see it maintained, but its generosity will decrease over the next 3 years or so. And this is important not only for founders selling their companies, but also for employees using the enterprise management incentive tax advantaged employee share scheme, which does use this relief as well. So that's disappointing to see that generosity decreasing. And I do suspect that government will be consulting on what might replace that as a more targeted measure in the future. There was a tax on carried interest was increased. So currently carried interest is taxed as a capital gains. The rate of that was increased at this budget. Also, they announced that in the future it will be taxed as income as well, further increasing the tax rate on it. This is a tax incurred by venture capitalists, so there is a potential for that to impact investment into the sector. And then finally, the one that has got an awful lot of coverage is the employer national insurance contributions increased very substantially.
Yeah, thanks, Martin. I think this chart I always like. It's from it shows where they've got the money from, and you can see it's really all the money comes into the Treasury as a result of tax increases from the employer NI contributions compared to the relatively ones of all the rest of it. But it gives a good sense as to how important that was for balancing the books from the Chancellor's perspective. And I saw Peter asked a question about the administration of R&D tax credits. Yeah, Peter, you're right. I hope that they've got the point that the HMRC need more capacity there, and they've listened on that point. We hope that we can engage with them through that expert group and others to make it as seamless as possible, whilst they've got to do the job of making sure that the reliefs are going to appropriate companies. But it's good news, and hopefully we'll get some more people in the weeds there to be able to do the actual work of administering the relief.
Yeah, absolutely. Please do use the Q&A function. We'll have time at the end of the slideshow for Q&A, and also keen to get your comments on the announcements as well, to hear how you think this budget will affect the sector. Looking at how the markets felt in response to this budget, this is gilt yields. So it's essentially the money market's view of how responsible this government is acting and how they feel the economy will pan out as a result of the measures announced. And you can see that there was a spike in yields, which is essentially a negative response, but not quite as high by any margin as the trust budget back a few years ago, which obviously led to significant turmoil in the markets and mortgage rates and interest rates going up. Steve?
Yeah, no, I think we'll digest this over the weeks and months ahead, but I think it's it's had a small impact, but certainly not a catastrophic impact, and probably is now priced in. We'll see. Obviously, there's macroeconomic effects of other countries and all the rest of it, but it doesn't look like it's been as seismic as we've seen other previous statements in the markets, which I imagine the Treasury team are reasonably pleased with. I think we looked to make sure that we reacted promptly on the day, focusing on the bits that we'd spent most time on. Obviously, in a sense that we work in partnership with other groups. The British Venture Capital Association had worked very closely on the carried interest point. The CBI had picked up so sort of more broadly the business tax environment, and you can see the range of responses here. We in a sense have limited resources as a small association. We try and focus on things that we can have the most impact in and work in partnership with others where it's possible. But I think our R&D approach and hopefully the money for medicines manufacturing has paid off as our focus was on there.
Yeah. Act 3, Steve.
Yeah, so not yet. We're not yet in Act 3. We had our drink at half time, I think, wouldn't we, if we're looking at this autumn, because we go into this. The Mansion House speech by the Chancellor is next week. We're starting to see some trails that she's going to focus on unlocking growth through pension reform in that speech. Obviously, this is an agenda we've been very close to for a while. Emma Reynolds, the minister, jointly between the Treasury and the Department of Work and Pensions. So I don't think we know exactly what's going to happen, but we know that this is an important part of the autumn package, and we thought it would be useful to sort of take you through some of the work that we've done ahead of this happening.
Yes, and I see that we've got a question, what does unlocking pensions mean, which is a good question. So what we mean by unlocking pensions is that the UK's pensions industry has traditionally not invested in equities, and that's actually decreased its holding in equities, whether public or private, since the 80s due to regulatory changes and changes in the structure of pensions. So as we have new workplace pensions coming online, what are called defined contribution pensions, there is an opportunity for these pensions to invest significantly into economic growth in the growth sectors of the economy, such as life sciences, but also infrastructure and other important sectors of the economy. So when we talk about unlocking pension funds, that's what we mean, encouraging these pension funds to invest into our sector. And it's one of the key pillars of BIA's policy work. And as you can see from this slide, something that we have been working very hard on for many years. And again, it's something where you can see the progress that has been made, particularly towards a life science specific solution. So going back to 2017, Patient Capital Review identified this lack of investment from the pension industry and highlighted life sciences, particularly as a sector where the gap in access to finance was quite significant. So that gave us an opening, allowed us to push, along with many others, for the launch of the British Patient Capital. Now, the biggest UK investor in venture capital, and it's a government organisation, was first launched with £2.5 billion and has since increased that quite significantly. Within that, we then in 2021 had the Life Sciences Investment Programme launched. As I mentioned earlier, this was a £200 million fund for life sciences venture capital schemes. And then in 2021 also, the Life Sciences Scale-up Task Force developed various proposals for how the government could encourage pension funds to invest into our sector, some of which did lead in 2022 to the announcement of lifts the long-term investment for technology and science. There's so many acronyms in this, aren't there? And again, that was a government-backed initiative to encourage pension funds to invest into our sector. We've then been working with the Labour government in opposition, where we proposed the Tibby scheme that has been taken up by the Chancellor. And then I think the really big announcement or breakthrough here was the Mansion House Compact in 2023, where the Lord Mayor of London and the Chancellor at the time, Jeremy Hunt, secured agreement from about 10, I think it was 9 pension funds to put 5% of their assets under management into unlisted equities by 2030. So that is another long-term game and something that we're holding their feet to the fire on. But of course, with the changing of government, there was always the chance that that momentum could fall by the wayside. But we're very pleased to see Emma Reynolds, one of those MPs that you saw us engaging with at the party conferences in those pictures earlier, appointed as joint minister between Department of Work and Pensions and the Treasury, with this mission to unlock pension funds, and launched the Pensions Investment Review, which we have engaged with to propose sector-specific policies that could result in the unlocking of pensions for our sector. And then, as Steve says, the Mansion House speech next week is a big staging post for this, where we're hoping to see more announced.
Yeah, Martin, I mean, maybe just to go back, and I always forget that I'm buried in this, but if you look at it, if you look at the UK compared to other countries, particularly Belgium, Switzerland, and other places, we've done very well at attracting global investment into UK life sciences with a third global cluster. But if you look at who's actually putting the money in, it tends to be US investors who are supporting UK life science growth, which is great. And we love American money. They're very sensible. They know what they're doing. But it does mean that little of the economic benefit of some of the things that we see in terms of the growth from great companies in the BIA comes back into the UK economy. So although we're happy to grow with global money, it would be good, we think, if some UK investors made some money from the life science sector as well. And the added benefit is if you have local investors as part of the board team that are making decisions about the future of companies, we think there's less of a chance that companies will move to the US at very early stages. They may put down deeper roots here. So there's an economic benefit to doing this, which aligns to the government's agenda for economic growth. There's also the potential for new types of investor to come into our sector to work with existing global investors, and we think that that's really why this matters. And it's a frustration of mine that I see the UK pensions industry, who get we are mandated to put money in as employers and employees these days, not looking at some of the highest growth segments there are in the UK. And that's why this is so important, because we want to link together the opportunity for wealth creation with the sector that we are, which can deliver that wealth rapidly. So we're trying to put that together through this long-term agenda. You're right, it was great to see companies like Phoenix, Nick Lyons' company, the Mansion House Compact, stepping forward, saying, yep, we're going to do this, making clear that they were interested in life sciences. They saw us as a growth sector. And you're right, it's our job to keep their feet to the fire through this process. But that's why we care so much about this. I realize it can be esoteric if you're running a company, but this is where the next level of money is going to come from, and it will be private sector money, we hope managed by experts who can then really help companies to grow to scale.
And we've got some questions here related to this, which I'd like to answer. There's one question:
Yeah.
Are UK life sciences really a stable, secure enough investment for pension schemes? I mean, I think there's various ways to answer this. First, I would say we've been working with the British Business Bank on the financial returns of our sector and the stability and the risk of that. And we're looking forward to them publishing some really interesting analysis in the next few months that I think will challenge the conception that life sciences is a risky investment compared to other sectors. Although they also did publish data yesterday showing that life science venture capital firms provide a better return on investment, perform better than venture capital firms in other sectors. So I think there is a real opportunity here for pension schemes. And there are many ways to control risk and to spread to spread one's risk. And we're not arguing for all of pension funds money to go into our sector or even into venture capital at all. It's about a small proportion, but that will make a big difference.
So I think, yeah, I think you're right. We are a stable enough sector and a secure enough sector to be part of a risk profile for a well-balanced pension scheme. We see that for the Canadian teachers' pension schemes have exposure to life sciences and private equity and other things and do very well out of it. I just think that teachers in Cambridge should have the same opportunity and the same mix as we see from the Canadian or the Ontario teachers. It's well established in other parts of the world. Other pension schemes have this, and it's interesting to go and see how out of kilter with other pension communities the UK is, both in investing in its domestic market and in its exposure and balance. So it's an esoteric argument within the pensions world, but it's interesting to see that we're out of step. And we think, look, we've got a fantastic community here that can do some stuff and deliver some growth. So yeah, I think it's the right question, and it's a question we are very keen to answer, and we should all be jumping up and down about in UK life science. Give us a slither of the cash, and we can make it grow.
There's also another question on AIM shares and the changes in inheritance tax relief announced in budget for that, which many fear could impact that market as a listing environment and indeed a place for companies to raise more cash. It's worth noting that the Mansion House Compact does include AIM as a equities market for that 5% of assets under management. So some of this money could go into the stock market there. And I think we could probably fill another webinar with the challenges on AIM as well. But it is certainly in many policymakers' minds as well as the venture capital picture.
Yeah, I responsibly, I think if people are only holding AIM shares because they were hoping that it would work for inheritance tax relief, I'm not sure that the policy objective of that has delivered a vibrant scale-up public market. So the question then is, if it hasn't worked, why hasn't it worked? And are there more efficient ways in which we could use incentives? It is sort of, I think, where we're at. AIM does work for some companies, and we've got some successful BIA members there. We've also got some members who have delisted and chosen other markets or gone private. So I think the question here is, what's the most appropriate way of delivering scale up finance? I suppose we are focusing more on trying to unlock the pensions than we are in reforming AIM, although there's some really interesting stuff around Pisces and new ways in which the public markets could be reinvented. I think they will go on, and that's another policy area we're interested in, but not one that we're going to go into in detail today.
Yeah. We've got another question on the Life Sciences Innovative Manufacturing Fund. Will the grant be any different to the last round? And is it open to anyone who already has one? The website is open, so you can go and read the criteria. I don't know the answer to the eligibility if you've already received a grant. I suspect if it is for a completely different project, you would still be considered, but it's worth reaching out to the Office for Life Sciences and we can make introductions if that would be helpful. There's another question, Steve, on support for international trade and a closer relationship with Europe on investment. I don't know if you've got any views on that.
So I think there's some specific. I think the industrial strategy is the opportunity there. I think if you think about the Westminster architecture, actually the industrial strategy document, the purple one with the wind farm on that Martin showed that they're going to do some detail on, I think that's where we can get into a discussion about how do we best utilize public sector support for international trade, and we can use the opportunity there to talk about that. I'm conscious that some people have talked to me about UK export finance as being a route that they would like to see as a way of doing that. And plus also there's some of the other work around building and engaging with networks around the world. We've done some of that with Beta and with some of the other groups. So I think there's some good opportunities there. I think we'll build on that through that discussion around the industrial strategy, because obviously financial support as part of international trade is a core part to this, and it depends, I suppose, a bit where you are in the journey or size and scale of your company as to what you need. We think that there's some life science specific stuff that we could do there. Obviously, if you're AstraZeneca, you would have a different need and desire to if you're a 3-person company out of UCL. So yes, closer relationship with Europe needs investment. Well, some respects you're right. The Horizon deal has been funded and is supported, and the fear that it would be stolen from from one pot in science to cover the others didn't materialize in the budget. And I don't know what will happen in terms of future policy with the US. I think we've all got to understand a little more of what the future Trump administration will look like, but we'll certainly keep an eye on it, and who knows.
Yeah. A question from Bristol: are there any incentives to grow the sector outside the Golden Triangle? In relation to the budget, there were some Innovate UK accelerator programs announced. I certainly outside the Golden Triangle. I remember one was in Edinburgh, another I think was in Manchester. I can't remember about Bristol, but there are several cities mentioned. So I do go and look at the budget document, and there were some there. But generally, obviously, of course, the R&D tax credits measures, the pensions agenda, this is all positive news for companies, no matter where they're based.
Well, as you know, Martin, the phrase which encompasses a three-sided object made of a precious metal is not one that passes my lips, on the basis that I think that the UK BIA operates for the whole of the UK, and most of these measures are UK. Whether you're in Scotland, whether you're in Northern Ireland, whether you're in Wales, you can apply for or England, you've got R&D tax credits. There were some specifics in the budget about investment zones continuing, which was the policy of the previous government, and it may be that does provide particular incentives in particular localities. All of those are away from the southeast of of England, and we will look to see whether those are incentives that are applicable for our sector. But we've endeavoured to deliver for all of our members in all locations.
Yeah, and thank you, Stephen Gibbons, for correcting me. It was Glasgow, not Edinburgh, I'm told. Thank you. Jim, question on the the Regulatory Innovation Office, RIO. Is it an opportunity for the sector or just another quango? They launched their new website last week, so you can go and read more about them. And we have met with them, and they do have a focus on our sector and engineering biology more broadly as well, which is fantastic. And I personally think it's an opportunity for the sector. But what do you think, Steve?
I think the thinking is right, which is that there are a number of innovative sectors or new technologies where you're going to need to think differently about regulation, and the development of appropriate regulation at some of these early stage technologies is good that they're thinking about it, and they're helping regulators themselves, the people in regulators, to think about that differently. If you're at our regulatory conference yesterday with the MHRA, it's interesting to see how they're trying to think about the next generation of technologies, what's appropriate, how do you operate in that data environment. So I think the fact that we've got forward-thinking regulators allied to the Department of Science and Innovation who want to use this for growth is about as good as we can get. Still early days. I think they'll have certain priorities, and we'll have to make sure that we align with those. The engineering biology opportunity is the right one, and of course, you don't want to have too much detailed regulation at the very early stage of a sector's development. What's an appropriate balance will be the other thing. But I think there's some good thinking there, and the opportunity to engage. And I think the opportunity for business to be engaged, which is useful.
Yeah. Thank you. Some great questions there. So thank you very much for those. We, of course, have many other events that you are very welcome to join and continue asking questions and sharing in the discussion. It's great to have this engagement from members. As you can see, they're coming thick and fast. So in 2 weeks' time, London Life Sciences Week is happening in London, obviously. This is a new initiative from the BIA and the London Mayor's Office to highlight all the great events that are happening around the Jefferies conference that week. And we've got a dedicated website where you can go. We'll include it in the email sent out after this webinar, where you can go and see all the different events that you can go to that week. So please do check out that. Also in that week, and stretching the BIA team very thinly, is Bioprocess UK up in Liverpool. Fantastic get together of the biomanufacturing community in the UK. Please do check that out. And moving into December, we have Women in Biotech in London. And then moving into January, the gala dinner at the end of the month on the 30th of January, when we'll also be publishing our annual finance reports, and look out for that to see how the sector has fared for investment in 2024. If you're on a BIA committee, the 27th of February should be in your diary as the big get together for all our committees. And then in March, Women in Biotech in Cambridge, and our Pulse, our programme for up and coming life science entrepreneurs with the Crick Institute in March as well. Please do go onto our website where you'll find more details about all of those events. And if you're not already a member and you'd like to be part of this association and this community, please do sign up. You can access information about membership and how to join on our website. So please do that. Steve, last words to you.
Well, thank you, Martin. You've done all the work, and you've battled through a nasty cold to be with us. You wouldn't notice from seeing you on screen. We really appreciate it, and I also appreciate the engagement of members. Thank you. I hope that's given you some idea as to where we're at this autumn. I think we've got some wins. I think we need to continue to engage, and I hope we've been able to put it in the context of the length of time it takes for some of these things that pop up overnight to come out are worked on within your association's team.
Yeah, thank you very much. And thank you everyone for joining. We will see you next time.
Thank you. Bye.